so it's fixed. Joe, good to see you. How you doing? Evening, how you been? Pablo, good to see you as well. How you doing? How you been? How's things? Good day. How you doing, Monica? How you doing, Monica? How you been? Jason, good to see you as well. How you doing, brother? How you been? Evening. Today, everybody's very focused on the JFK Kennedy files that came out. Or it's going to be released today, essentially. There's a lot of X spaces going on all about JFK Kennedy. But there's also a lot of things happening inside the market space, which I think people should be more focused on, rather than something that's happened in the past. Hi, Miles. Artistic, good to see you. How you doing? How you been? Good evening, Miles and CMF, Free and Feather. Good to see you. How you doing? How you been? Also, the title is now fixed. It says episode 282. Evening, Miles. Hope all is well. Mav, good to see you. How you doing? How you been? Evening, Miles and CMF. Manny, good to see you. How you doing, Manny? How you been? Hi, Miles and CMF. Dennis, good to see you. How you doing? How you been? God bless you for being the rock on this roller coaster ride. No problem, Monica, anytime. The last person that's put a comment, you need to put your comment in English, otherwise I'm not going to be able to read it. Sorry about that. But if you can, rewrite whatever you did write in English, please, if possible. Otherwise, I'm going to have difficult, because I don't know what you've just read. Greetings, Miles and CMF. Let's go, bro. How you doing, Ray? Good to see you, brother. How you been? Let's go. Okay. Let's do the intro. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles, and I host this live that you're watching right now. This is episode 282 of the CMF Live. In this live, I talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you do have any questions, put it down in the comment section. I'll be more than happy to help you out. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to the CMF Live if you're watching this for the first time ever. And if you're a regular, let's go CMF. And by the way, thank you so much to everybody from the CMF, because I'm getting notifications. Thank you so much to everybody from the CMF who has, if you're watching this on X, thank you so much if you've liked this essentially live on X, if you've retweeted this live on X, if you put a comment outside the live on X and hashtag the XRBOMI, and liked each other's essentially comments as well outside the live. Thank you so much to everybody who's actually done that from the CMF. If you haven't done it and you're watching this right now, CMF members, please go and essentially retweet this live on X. If you watch this on X, retweet it, like it, put a comment, any comment you want, and like each other's comments as well. Even hashtag the XRBOMI. If you watch this on YouTube, thank you so much if you also like this live as well, CMF members. And then if you put a comment outside the video, outside the live as well. And if you haven't and you're watching this on YouTube, CMF members, please like this video on YouTube if you're watching this right now. And put a comment outside the live as well on YouTube. Thank you so much to everyone who's done that. Good evening, Miles and CMF. Bullock Soppy, good to see you. How you doing? How's things? Hi, Stormy. Hi, Miles and CMF. Stormy, good to see you. How you doing? How's things? Hi, Miles. Would you say Iran war could increase crypto prices? Iran's war could increase crypto prices? It's an interesting perspective. The only way the Iran war would increase crypto essentially prices would be if we're in the stage of regulations and an asset like XRP, for example, is being used as a medium of payments between different currencies, then probably yes. A lot of money essentially does funnel through USDT, but there's been a time period where USDT essentially starts freezing wallet addresses, which is one of the reasons why Russia is trying to distance itself from USDT. But stable coins could essentially do well in times of war. To avoid sanctions, for example. Certain crypto assets could do well as well. For example, Shiba Inu, believe it or not, the Iranian government use Shiba Inu to funnel money around the world. A lot of people don't know that. Now you do. They also use some other few stable coins to essentially funnel their money to avoid sanctions. So the Iranian government does use a few random coins to move around their money. But in terms of increasing prices, if we have regulations and asset like XRP is being used as a medium of payments, then sure, it makes sense for an asset like XRP to do well in times of war. To be very honest, it's an interesting perspective. Good evening, Miles. Congratulations on episode 282. Let's go, Scott. How you been, brother? How you been? Evening, Professor Miles, and the rest of the CMF family. Thank you, brother. Good to see you. How you doing? How you been? Good evening, Miles of CMF. How are you, Kelly? I'm doing great. How you been? How's things? And we're also going to talk about regarding the Iran, Russia, and US essentially situation a little bit later on tonight's live, because we've got some updates on that matter, let's just say. But before we go through any of that, the first topic we're going to go through on tonight's live is regarding Bitwise's CIO. The market is poised for upsurge if Fed ease policies, says Bitwise's CIO. So a lot of people assume that the market is going to be, on rocky grounds, or it's going to go shattering downwards. Or a lot of essentially analysts also see Bitcoin not doing too well for itself, and essentially other crypto assets taking the ranks. Now, in the perspective that just came out today, which is Bitwise's CIO's perspective, is that the market is actually going to do well for itself, but there's a however part, if the Fed ease on their policy. So here's what he means. Bitwise's CIO, Matt, commented on the potential market trends going forward, attributing to a significant moves to possible that the Federal Reserve policy shifts can make happen for the market space. Comments were made essentially today, reflecting recent observations by Matt. The cryptocurrency market may see a sharp upswing if the Federal Reserve loosen its monetary policies slightly, said Matt, the chief investment officer at Bitwise Exchange. He noted that this potential suggesting that recent market essentially indifferences to positive news might reverse if policies adjust by the Fed. A softening Federal Reserve stance could invite bullish market essentially reactions. Investors might anticipate altering essentially their strategies and aligning more closely with Matt's view that a shift could essentially help with the growth of the market space, and it's a possibility that what Mike is trying to say could come true. Feedback to the potential Federal Reserve shift and Matt's essentially insights was notable. We have observed time and again that when the Fed signals policy shifts, the markets respond quickly and often with substantial momentum, said an industry analyst. Experts and market participants increased optimism, recognizing the potential impacts on currency values and broader essentially economic ramifications. Financial experts referencing historical data predict that the Federal Reserve policies easing could lead to increased cryptocurrency adoptions and valuations. Analysts highlighted parallels between current conditions and past events when the market shifts, major essential regulatory changes influencing asset prices significantly. So, according essentially to Matt, the CIO essentially of Bitwise Crypto Exchange, if the Fed comes out and is a bit more loosened towards essentially the market space, it could have a positive essentially effect on the crypto space based on historical data. It's true, if the Fed does come out to essentially ease its way into it, then yes, crypto will see a positive essentially upward swing. Now, is that upward swing going to stay for a long time? Probably not. Any bad news can pull the crypto market back down again, essentially because Bitcoin is extremely volatile and every crypto asset is following Bitcoin's footsteps because we don't have regulations, which means we don't have utility, which means the crypto space follows Bitcoin's speculative footsteps, unfortunately. But Matt could essentially have a point we could be onto something. But unless we get regulations, we're not going to be staying up for too long. We'll just be balancing our way through until we get regulations. Now, a good thing about regulations is we got to a stage where stablecoin regulation, the Genius Act, has actually got to a stage where it can pass into law, which means we're getting our first, essentially, stablecoin act passed into law, which is impressive. For a country that was well behind any other nation out there regarding cryptocurrency regulations or innovation in cryptocurrencies, America is definitely showing signs day by day that it is becoming the hub for cryptocurrencies. And even in fact, we have one particular crypto essentially firm that has decided to move into the US to expand its territory. Typically, crypto companies were leaving the US under Biden's administration because they were stifled and couldn't grow inside the United States of America. But crypto companies have decided to come back into the US according to data, which we're going to go through on tonight's live as well, because they're seeing actually America as a hotspot for cryptocurrencies to have an exponential growth under Trump's administration, believe it or not. So the next news we are going to be talking about tonight's live is regarding Bo Hennings. But before we go through that, which is also Trump's essentially advisor when it comes to crypto space, one of his advisors, let's go inside the comment section first before we do go through the next news, which is regarding Trump's advisor's perspective on the market space and what's going to be happening regarding the Bitcoin space. But before we go through that, let's go inside the comment section first. So let's see where we were at. We were at here. Yes, that's why I have been the crap out of both Shiba and Lunacy. Let's go, Thompson. Miles, I was Bloomberg today, and Cathie Woods gave 50 minutes interview, and she kept mentioning three cryptos: BTC, ETH, and Solana. She not once mentioned XRP. Yeah, Cathie Woods has not really been in favor of XRP ever. She's never mentioned XRP in general. Never. She's never mentioned it. She's always been obviously a very big advocate for Bitcoin, due to her firm having a Bitcoin ETF. She's also been a big advocate for Ethereum due to her firm having an Ethereum ETF. And Solana she's also been a fond of as well. But Solana has always been used for funneling either essentially meme coin money or money laundering, to be fairly honest. But yeah, she's never mentioned it, to be fairly honest, at all. Not once in her life. Cathie Woods kept mentioning utilities and stablecoins, but she did not mention XRP at all. Do you know why that could be? That's why. She's never mentioned XRP in her entire lifetime. She's always been in favor of Bitcoin because she has an ETF for her company. She's been in favor of Ethereum because she has an Ethereum ETF for her company. And Solana, she's been mentioning since day one. But she's never mentioned XRP or any other crypto asset, to be fairly honest. Hi, Miles, CMF. Good to see you as well. George, how you been? How's things? Any tomorrow at 4 p.m. UK time on Bloomberg, it will be Brad giving interview and talking about XRP. Probably yes. I put it down to the court case, SEC versus XRP. Fair enough. Share the live. Let's go, Scott. Morning, Miles and CMF. Shelly, good to see you as well. Morning. How you doing? How you been? So, Bo Hennings is what we're going to talk about next. Bo Hennings said, we want as much Bitcoin as we can get. Bo Hennings, the executive director of Trump's Presidential Council on Digital Assets, echoed the White House stand on Bitcoin reserves and possible purchases. Now, we all know that the White House has not confirmed any plans of purchasing any more Bitcoins, and instead they're going to be using whatever Bitcoin they have essentially stashed away from all these essentially, from all their the black market essentially seizures they've done. Now, the US President Donald Trump has signed 2 executive orders to create a digital asset regulatory essentially framework and establish the nation's first Bitcoin reserve since taking office in January 20th, hoping to fulfill the campaign promises pledged to crypto voting blocs. The latter, essentially issued on March 6, authorized an audit of America's current BTC holdings, which are estimated to be around 200,000 tokens. It also mentioned leveraging budget-neutral strategies to possibly buy more Bitcoin, quelling fears of further strains on the national debt. On the national deficit. Bo Hennings retreated this plan on March 18th, today essentially, at an event in New York organized by Blockworks. Speaking at the BTC plans at the White House, Hennings said it's important to essentially the US to have, retain and build on its digital gold reserve. Bitcoin is often referred to as a digital gold due to its store of value traits. Unfortunately, as I've said before many times, Bitcoin, even though it's given the title of digital gold, it really doesn't operate like digital gold in any sort of a way, because gold is actually doing quite well for itself, while Bitcoin is very unstable right now. And that's not the first time. Also, Bohannon's reaffirmed that Trump's administration was actively assessing how to acquire more Bitcoin. He said, I get asked all the time how much BTC you want. Well, that's like asking a country how much gold do you want, as much as we can get, Bohannon said on the stage. The US is the world's largest nation state, essentially BTC holder by a few thousand tokens. However, its position at the top of the pile may change due to filings from Department of Justice. Criminal seizures from cases like Silk Road and Bitfinex compromise all of America's Bitcoin portfolio. In the case of Bitfinex, the DOJ suggested returning about 95,000 Bitcoins stolen from the crypto exchange back in 2026. Should a judge grant this motion, the US would fall behind China in their Bitcoin wealth and become only second best sovereign BTC holder. So, we do know for a fact that essentially the Bitcoin that the United States of America has, some of it, essentially 95,000 tokens, are from the Bitfinex hack. The rest essentially are from what was it, Silk Road essentially, and a few other firms that were seized as well. A judge is on the verge of giving some sort of verdicts, and let's be honest, judges are against Trump. Not every judge is against Trump, but there are certain judges that are against Trump, and I do see maybe one particular judge saying that Bitfinex should get back their 95,000 Bitcoins, which will definitely take a hamper on the Bitcoin essentially seizure or the portfolio for the United States, which wouldn't make the Bitcoin maxis happy in any sort of a way, let's just be honest. But the rest of the crypto space will be laughing at the Bitcoin maxis as usual. But moving on, essentially from Bohannon's recent speech on, he wants all of it no matter what, but they're trying to find ways of not using taxpayers' money to buy more Bitcoins. We're going to talk about MicroStrategy, someone who can afford to buy Bitcoin without using taxpaying dollars. So MicroStrategy seeks another $500 million to expand its Bitcoin holdings. Now, Michael Saylor has not slowed down even for a second on their Bitcoin purchases. Even though the United States has not mentioned any plans of buying Bitcoin to add to their essential portfolios, Michael Saylor doesn't want to slow down. So here it is. MicroStrategy, the business intelligence firm led by Michael Saylor, has filed with the U.S. Securities and Exchange Commission, SEC, to raise $500 million by offering shares. The company plans to use the money earned from this offering to increase its Bitcoin holdings even more. Currently, MicroStrategy owns nearly 500,000 Bitcoins, making it the largest corporate holder of Bitcoin. The SEC filing, MicroStrategy revealed, its intention essentially is to offer 5 million shares of its 10% essentially Series A preferred stocks with a stated essentially value of $100 per share. The offering is expected to raise $500 million, which will go towards purchasing more Bitcoins for the firm. The company stated that the funds would be allocated for general corporate purposes, including essentially Bitcoin acquisition. However, the filing also acknowledged the risk associated with Bitcoin's price volatility, noting that there could be major fluctuations in the value of Bitcoin purchased essentially with these proceeds. MicroStrategy's latest filings comes shortly after it acquired 130 Bitcoins for $10.7 million at an average price of $82,981 per Bitcoin. This purchase increased the company's total Bitcoin holdings to 499,226 Bitcoins. The company's average purchase price for its Bitcoins is around $66,360 per coin. As of March 2025, MicroStrategy holds essentially the combined value of 499,226 Bitcoins with a combined value of $35.9 billion. The company's average purchase, essentially, as I said previously, $6,380, is approximately of unrealized profits of $2.8 billion. However, the company's Bitcoin investments are not without risk. MicroStrategy has been buying Bitcoin left, right, and center for the longest time. It actually started a trend for other companies to follow in suit. There are two companies in Canada that follow MicroStrategy's blueprint, which is buy Bitcoin, add it to your company's portfolio. There's also a company based out in Japan who's not doing very well and decided to get it essentially in the Bitcoin venture and follow MicroStrategy's footsteps by the name of MetaPlanet, which is now one of the most prominent essentially companies based out in Japanese market space that purchases Bitcoin and follows their footsteps as well. But there is a however part regarding MicroStrategy and all their Bitcoin purchasing, all the money that they've been raising to buy back to back. So here it is. The company's Bitcoin investments are not without risk. If Bitcoin drops below the value of $66,380 per coin, MicroStrategy could see its Bitcoin holdings turn negative. possibly leading to financial losses. And given Bitcoin's price volatility, such a scenario remains a possibility, emphasizing the inherent risk in the firm's aggressive acquisition strategy. So, Bitcoin is on a downfall right now. And with the whole Ukraine and Russia situation coming to some sort of an end, it's a positive. But the next war that's starting straight after Ukraine and Russia war comes to a ceasefire for about 30 days is Iran versus the US and a few other Middle Eastern countries. And if that war starts, we can see Bitcoin tumbling down even more. And that's not going to be good news for MicroStrategy or MicroStrategy if it keeps on tumbling downwards and downwards and downwards. And then tariffs will add on top of that, which will put more pressure on Bitcoin to tumble more downwards. So if it does reach the round about the price of below $66,380 per coin, MicroStrategy is in incredible trouble. However, there's always a however. If we get regulations in which essentially the SECs and the CFTC, after a decade coming together, working incredibly fast on to bring out those regulations, then the rest of the crypto space that have utility purposes like XRP, XLM, XDC, Solana, Cardano, Ton, and the list goes on, essentially the list goes on of utility crypto projects. Those crypto projects can essentially detach themselves, as I've been saying for about 2 years now, from essentially Bitcoin's footsteps. And if Bitcoin starts tumbling down, who cares? Because the rest of the crypto space, they're in regulations now, which means that utility is going to start kicking in. Now, moving on from essentially MicroStrategy's new purchase, which is $500 million worth of Bitcoin, to on one side, just to also put in perspective, there's been a 5 weeks of consecutive essentially sell-offs happening on Bitcoin ETFs, where institutions, or not the institutions themselves, their clients, their high-profile clients that are buying Bitcoin ETFs, are jumping out of the Bitcoin ETF space. And what they're stating is either they're taking their profits, or they're trying to skip on fees regarding management fees regarding their Bitcoin ETFs, or they're just waiting on the sidelines for the list of ETFs that are about to be approved by the SEC. Because let's just be honest with ourselves, there's the XRP ETF, the HBAR ETF, the Cardano ETF, the Solana ETF, and there's a multitude list of ETFs that are supposed to be approved by the SEC. So that could be another reason why institutions are pulling out of their Bitcoin ETF spaces, and why there's a 5 week consecutive essentially net outflows of Bitcoin ETFs happening. Those are data points. So, but MicroStrategy is trying to come in and purchase $500 million to essentially restore faith in Bitcoin and say, we're standing Bitcoin no matter what, even if there is 5 consecutive weeks of net outflows happening on Bitcoin ETFs from institutional perspectives, or that the United States of America doesn't have any sort of plans so far on how to purchase more Bitcoins because they can't use taxpaying money. But MicroStrategy wants to restore that faith towards the Bitcoin maxis, that he is still there for them no matter what. It could be a very stupid plan if it backfires, because that means that MicroStrategy will have to go for Chapter 11 or Chapter 15, which means they'll have to start selling off their assets, which will completely collapse Bitcoin. But if regulations comes through and that happens, who cares about that? Because the rest of crypto space can move on into utility. Now, the Nasdaq is what we're going to be talking about next. But before we talk about the Nasdaq, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer the questions you may have. So let's go inside the comment section first before we go to the next news. Miles Adder should be making a move since it's supposed to be a part of the crypto reserve, correct? Yes. Cardano should be doing well for itself, as because it is a part of the essentially crypto reserve. Once the regulations come in, Cardano could do well for itself as well. They have some good contracts in place internationally as well. Hi, Miles and family. Golden Dragon, good to see you as well. How you doing? How you been? Good evening, Miles and CMF. Mickey, good to see you as well. How you doing, brother? How you been? Hello, Miles and CMF. Comatose, good to see you as well. How you doing? How you been? Good evening, Miles and CMF. Mike, good to see you as well. How you doing? How you been? Morning, Miles and CMF. Ghost Boner, good to see you as well. How you doing? How you been? How are you today, Miles and CMF? Lena, I'm doing great. Good to see you as well, Lena. How you been? So, the Nasdaq. Yesterday, I was asked the question of, what about Polkadot? Is Polkadot going to do any sort of movements going forward? Well, ironically, today some news came out about Polkadot, and it was from the Nasdaq. So here it is. The Nasdaq makes a formal request to the SEC for an approval of a surprise altcoin spot ETF. The Nasdaq has submitted a formal request to the U.S. Securities Exchange Commission, SEC, to approve the listings of the trading shares of Polkadot for an ETF proposed by Swiss asset manager 21 Shares. The exchange's 19B4 filing seeks regulatory permission to list the ETF subject to the SEC's approval. The fund aims to track the spot price of essentially DOT, the native cryptocurrency of Polkadot's network, and this latest essentially development follows 21 Shares' amended S1 filings earlier this year, which reinforced the firm's commitment to expanding its suite of essentially crypto investment products inside the ETF space. In addition to the Polkadot's essentially 21 Shares is actively pursuing SEC approval for its other essentially assets, for example, XRP ETF or Solana ETF, and Grayscale Investments, another big name inside the crypto essentially asset management sector, also filed for an SEC for its Polkadot ETF as well. In addition, the asset managers for many altcoins, including Cardano, XRP, and Solana, have also filed for ETF application and are waiting the SEC essentially review. The altcoins essentially spot ETFs applications were filed after crypto-friendly US President Donald Trump obviously took office, and his administration is definitely showing they are 100% crypto-friendly, no doubt about it. But in general, if you are somebody that is holding Polkadot, and yesterday I was asked the question of, is Polkadot good? Is it going to do well for itself in the future? Well, today we have some news. The Nasdaq has formally essentially applied for the ETF filing to be approved by the SEC for Polkadot to go inside the market space. But the same company that essentially is behind that, the asset management Swiss company, which is 21 Shares, also has filed for an XRP ETF and a Solana ETF and a few other ones as well. And this is another sign of, maybe there's a reason why there's been 5 consecutive weeks of Bitcoin net outflows regarding the ETFs from high-profile clients, because it could be they're going towards other essentially assets out there as well. And they're just waiting on the sidelines for all these ETFs to be approved so they can have that diversification to their portfolio, because everybody knows the oldest saying inside the market space is basically, don't put all your eggs in the same basket. Somebody should quote that to Michael Saylor, because he's been putting all of his eggs in one particular basket, which is Bitcoin. And I think personally, he should be diversifying his portfolio as well. But there's a reason why he's not diversifying his portfolio, and time will tell what that reason is, because Michael Saylor is a very intelligent man, but even intelligent men sometimes make big mistakes. So let's just see how that one plays out. Ark Invest, Cathie Woods is what we're going to talk about next. Ark Invest, Cathie Woods says she wants to bring company funds on chain. Now, she's not the first person that said this regarding bringing company funds on chain. Coinbase has also said this in the past as well. A few other firms have suggested that they want to essentially bring their funds on chain and make it more transparent, and that companies should go more towards tokenization, and let's just start this DeFi transparency world and get it over with. So earlier this month, executives of Coinbase hinted at similar plans in the tokenization space and aimed hopes of a clearer essentially regulatory landscape. Ark Invest CEO Cathie Woods, one of the earliest traditional financial investors in crypto, hopes to bring some of her company's funds on chain once the regulatory landscape allows the company in the US to do so. She said, "We think tokenization is going to be huge," Woods said at the Digital Asset Summit in New York today. She said, "We'd love to be able to tokenize our venture fund, essentially ARKVX, or our digital asset revolutionary fund." She said, "I think the regulations are starting to open up in a way that will allow us to do that. So we'd like to seize the moment," she added. And US regulators have yet to provide a clearer framework and rules for registering essentially security tokens, making it difficult for entities like Ark Invest to launch products essentially in the booming space that some believe could essentially become a multi-trillion-dollar market space by the end of 2030. She's not the only one that thinks that essentially the tokenization space is going to become a multi-trillion-dollar market space. Brad, essentially the CEO of Ripple, thinks the exact same thing. Brian Armstrong, CEO of Coinbase, thinks the same thing as well. And we've heard essentially from Bank of America, they said exactly the same thing. JP Morgan's analyst Nicholas was on those lines as well. Eric, the Bloomberg specialist analyst, said the exact same thing. There's a lot of essentially CEO perspectives and executive perspectives that have come out and said that, the tokenization market space is definitely going to be a multi-trillion-dollar market space by 2030, that more firms should get involved in the tokenization space. And it's definitely showing, because they're not the only ones that are doing this. So at Morgan Stanley, for example, executives of Coinbase at a big essentially holding of Ark had previously mentioned a similar outlook, although it was vague, as the company tried to make their mark in the tokenization industry. At the Morgan Stanley Technology, Media and Telecom Conference earlier this month, Coinbase's chief financial officer, Alicia, said essentially that the crypto exchange in its talks with the Securities Exchange Commission SEC to issue a security token, a move that previously failed when Coinbase attempted to go public such a product back in 2020. Obviously, back in 2020, it was very difficult. You know why? Jessa Pollock, the founder of Base essentially network, said the Ethereum Layer 2 network built by Coinbase later said in a post on X that where no concrete plans to tokenize Coinbase stock yet, because the SEC is still trying to build that foundation for the crypto space, because the previous administration did absolutely nothing for the crypto space, and this current administration, which is Trump's administration, is doing everything they can to move things along from nothing to a strong foundation for the crypto space. Although some people do struggle to see that inside the crypto space and blame Trump for the market space and say he's ruining the market space, which in reality Trump is actually trying to fix the market space by making essentially a foundation so the crypto space is no longer a house of cards. We are in essentially a phase and working to understand what needs to be unlocked from regulatory perspectives to bring assets like Coin to Base in a safe, compliant, and future-looking way, he wrote from essentially Coinbase. So Coinbase, Ark Invest, and a few other companies are really on the verge of making their companies go completely digital by tokenizing their entire company and being fully transparent. And it's going to definitely be a trend of more companies coming out and saying they want to go to tokenization and tokenize their entire company and tokenize their stocks, most importantly. But that is extremely positive to see when companies come out and say they want to enter the crypto space by going to tokenization and tokenizing their entire company. Now, moving on essentially from the new perspective that essentially came out from Ark Invest, Cathie Woods, to regulations. Specifically the stablecoin bill. That's essentially we've been talking about for the longest time. Now, there's been two stablecoin bills. One is ironically called the stablecoin bill. The other one is called the Genius Act. The Genius Act came about regarding, in terms of Trump's administration, while the stablecoin bill came out a while ago. And the stablecoin bill, ironically, is backed by Senator Elizabeth Warren, which should give an indication of that's a terrible bill, while the Genius Act is backed by people from Trump's administration, which should tell you that's an amazing bill for the crypto space, because Elizabeth Warren is the last person should be essentially in any part of the crypto space because, well, what she's capable of doing. All she's ever did was hinder the crypto space as much as she could. But the Genius Act has done quite well for itself, so here it is. Stablecoin bill expected within 2 months, says Trump's advisor. Senator Bill Genius Act recently passed the Senate Banking Committee with a strong bipartisan support of 18 to 6 votes. This reflects lawmakers' commitment to providing regulatory clarity for stablecoins, and the bill essentially signals significant advancements in shaping the cryptocurrency regulations. The proposed legislations seek to balance innovation with stability and aims to ensure that the USD-linked stablecoins in the digital age, if approved, it would establish a definite guidelines for a previously unregulated sector. The motion has fueled essentially renowned interest from institutional investors, as noted previously by Circle's CEO, for example. And according to Circle's CEO, he said, increased clarity has spurred essentially a 15% rise in USDC supply. The broader market remains essentially cautiously optimistic about how this could shape the future of digital finance regarding stablecoins going forward. And financial markets are gearing up for the future changes, driven essentially by anticipated regulatory stability. Political and financial players hope the legislation will solidify the US as a leader in digital currency and innovation while fostering essentially responsible market growth. And unlike essentially past efforts such as the 2021 infrastructure bill in debates, this round of legislations appears to employ a more careful and tailored essentially regulatory approach. It is hoped that this will provide a global standard for dealing with stablecoin regulations. And Christian Smith of the Blockchain Association describes the ongoing bipartisan support for the bill as an unprecedented consensus. Experts speculate that if successful, this regulatory framework could significantly impact both US and international crypto policies. Now, one part of this bill that Republicans are pushing for is going to be very, very bad for Tether USDT. But to be fairly honest, we don't really care about USDT in any sort of a way, because we always knew USDT was going to struggle in a regulated market infrastructure space. Let's just be honest with ourselves. We knew that a long time ago. if you've been inside the crypto space for the longest time, you know that essentially Tether, there's going to be a time period where Tether is just going to struggle. And we saw that essentially happening with the EU when the EU introduced MiCA regulations and pretty much kicked out Tether because USDT didn't want to show transparency. Let's be very honest with ourselves. The rules were, if you want to operate in the EU, you would have to hold a substantial amount of assets in EU banks, just in case your stablecoin ever depegs. You have some sort of assets in EU banks and it wouldn't cripple the EU economy for using your particular stablecoin. USDC had no issues with this and they essentially showed transparency and started holding some certain assets in their banks. Yet there had to be such a percentage, 60% of assets in their banks just in case you do depeg somewhere in the future. Tether essentially got kicked out of the MiCA regulations at the EU. They got kicked out of Canada and some certain exchanges. And a few other countries on the verge of following suit on that matter. One of them is the United States of America, by the looks of it. So a few Republicans pushed for the idea that any stablecoin that's going to be essentially operating as a US dollar stablecoin, based in the US or based internationally, and if it doesn't even operate in the US, but instead it's still a US dollar stablecoin, it has to be approved by the US. So if any stablecoin wants to operate as a USD stablecoin, then it has to be approved by the US no matter what, is what they're trying to also add in some sort of a bill. Which means that if Tether is not accepted in, for example, America, then Tether is going to struggle to work with any other country out there because it's not an approved stablecoin by the US because it's a US dollar stablecoin. But if Tether has, for example, a Japanese stablecoin or essentially a Korean stablecoin or a Durham stablecoin or so on, then they can operate as much as they want. The US wouldn't care less. But if they want to operate as a US dollar stablecoin, then they have to be approved by the US, even if they don't operate in the US, because the US sees it as, even if you don't operate in the US, then US citizens might still use your stablecoin outside of the US, which therefore will put US citizens at risk of depegging situations or other scenarios with your stablecoin. So even if you are not allowed to operate in the US, you're not allowed to operate anywhere else, which is going to be the endings of Tether pretty much in the long run. But that is if that bill gets passed, which is going to be an interesting one. Even Howard Lungton, who essentially is the man that purchases US treasuries for Tether, who's also a part of Trump's team, when he was asked the question of, you know, would you bring Tether into the US because you sell US treasuries to Tether and you're a part of Trump's crypto team? Would you bring Tether into the US? Even he declined to respond on that matter, on that question in his way. It almost seems like he was also distanced himself from Tether as well. But there are many other major issues with Tether. The biggest one for the US is, well, they're not an American company, and they're operating as the biggest US dollars in the planet, basically. Tether is not an American company, but they're operating as a US dollar stablecoin in the digital, essentially, world, which is not beneficial for the US in any sort of a way. So you can see where this is going for Tether's future in the long run. The other argument is Tether doesn't have the backings it has. But the biggest argument for the US is it's a US dollars that's not operating outside, essentially, that's not operating within the US, which doesn't add up for the US, especially with the amount of Chinese money spinning inside of Tether. That raises more alarms for the US than ever before. But yeah, if they do go forward with that bill that, you know, USDT, for example, you know, USDT is not allowed to operate in the US and therefore it's not allowed to operate anywhere else around the world, well, that's going to be very bad for Tether. Also bad for Bitcoin because that's the only thing backing it. Now, before essentially, not the only thing, but a substantial amount of it, before we talk about the next news on tonight's live, which is regarding essentially Paul Atkins, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. I'll be more than happy to answer the questions you may have. So let's go inside the comment section first, and then we go straight into the next news, which is regarding Paul Atkins, which is going to become, you know, the new SEC chairman when he's approved and take over the current chairman, acting chairman, Mark. Okay, we were here. Since China, so Robin says, since China usually waits for US to make the first move, do you think it means CFX will boom later? Possibility, yes. But the thing is, the US is not very big on CFX, but the Chinese market space is quite big on CFX. They, you know, as I said previously, they awarded scientist that's a part of CFX essentially team, an award from China. And there's going to be certain crypto assets that are going to do substantially better in different jurisdictions around the world. So there'll be certain crypto assets that will do very, very well inside the Asian market space, but wouldn't do as tremendously well inside the Western market space. And then there's going to be assets that will do in general very well in any market space out there. So assets like XRP will do very well in any market space out there. XLM will do very well. XDC will do very well. HBAR will do very well in any market spaces out there. Cardano will also do the same amount of, very well. But certain other assets like CFX, for example, will do very, very good inside the Asian market space over time, but might not do as well inside the Western market space. And that's okay, to be fairly honest, because there'll be assets that might do very, very well inside the Western market space that might not have the same tremendous outlook inside the Asian market space. But as I said previously, there are assets that are going to do very, very well in both market spaces. And there's going to be certain assets that will do well in this market space and certain assets that will do well in this market space. But in general, there's going to be that in-between line where there is, XRP, XLM, XDC, HBAR, essentially Cardano, and so on. And they'll just do well all across the board. Hope that answers your question. Michael Saylor will sell all of his BTC in the bull run and he will buy XRP. He's playing the long run game. Let's go, funky brother. It's an interesting perspective. I mean, it's a better play for him, to be fairly honest. I'll be very honest. Bitcoin is the most speculative asset on planet Earth. And the only thing that's helping Bitcoin is obviously its limited supply. But even according to BlackRock's ad that came out a while ago, where they said they can't guarantee the supply of Bitcoin will stay the same, essentially what BlackRock's telling their clients was the interesting factor. It made Bitcoin maxis completely go absolutely ballistic on that matter. But BlackRock was just trying to say the honest truth. But yeah, I'll be very honest. If he is doing that, that's an incredible play for him. Hey, Miles, just joined. Hope you're well. Expecting a rate cut tomorrow. Am I expecting a rate cut tomorrow? It will be in the best interest of the Fed to do a rate cut, especially with the pressure essentially the tariffs are putting, which is one of the other reasons that Trump is doing tariffs. There's multiple reasons of why Trump is doing tariffs, and one of them is for the pressure on the Fed regarding rate cuts. And there's other reasons as well, because other countries have been abusing the US with tariffs, and now that the US is just tariffing them back. Another reason is the US is trying to restore money back to safe havens, like the US dollar is trying to make it stronger against other currencies, and it is working. The US dollar is getting stronger against some other currencies around the world. Also, gold is doing a lot better in times like this as well. Also, the deficit is going to be better play for US. There's multiple reasons why Trump is doing tariffs. And one of those reasons was to put pressure on Jerome Powell, because Jerome Powell said essentially when Trump was becoming president that he's not going to cave into Trump's demands and do rate cuts essentially out of the blue, is what Jerome Powell said. He said he's not going to be caving into Trump's demands in any sort of a way at all. So what does Trump do? He plays the role of tariffs, which makes the US economy stronger in the long run, short-term volatility for strong-term essentially prosperity, to be fairly honest. And many other reasons, is actually going to make a very strong market space for the US. It's going to bring manufacturing back to the US. It's going to lower prices in the US over time. A lot of positiveness is going to come from these tariffs if people just saw the longer playbook on it and not just the short-term play that CNBC or essentially CNN or NBC is trying to tell people, because the short-term play is, oh, it's going to be very, very volatile and everybody's doomed. The long-term play actually is the truth about it, is actually going to help the US economy become a much more stronger economy along the way and so on. And why that plays in is because Trump is putting a lot of pressure on Jerome Powell to do tariffs. So if he comes out and does tariffs, he's playing by Trump's plan. If he doesn't come out and do tariffs, the longer he doesn't do tariffs, the worse it will become, and it will all fall like a house of cards on Jerome Powell's head. So, and Jerome Powell is very well of this. So it's better in his interest to do tariffs. If he doesn't do it this time around, he has to do it very, very soon. Hi from Malaysia. Good to see you as well, Shakira. How you been? How's things? Now, Paul Atkins is what we're going to talk about next. Paul Atkins, who is going to become the new SEC chairman, who is very, very pro-crypto. His hearing for the SEC chair is set essentially for March 27th, after all the delays that we've had. A lot of people are wondering, where the hell is Paul Atkins? Why is it taking so long, essentially, for him to be approved in? To be fairly honest, Mark, the acting chairman of the SEC so far, has done tremendous work, to be fairly honest. He's dropped every case one by one There's a few cases he still hasn't dropped, which is one of them being the Ripple case, but that was also a very complicated case regarding Ripple versus SEC. Ripple is obviously trying to get the most better outcome for themselves, which as they should do, because Ripple has been criticized the most and they deserve to have the better outcome than any other crypto asset out there from the SEC. But in general, Mark has done a tremendous job as an acting SEC chairman, dropping cases one by one, which nobody thought he was able to do. And he was just waiting for Paul Atkins. And I said he can do them if he wants to. And he ended up dropping cases, Coinbase case, Kraken case, and so on, consensus. And then essentially you have Hester Pierce is in charge of the crypto task force, which she's also done an incredible job with the SEC. Straight overnight, when Gary Gensler left, they created the crypto task force. Trump's administration put Hester Pierce in charge, and she is essentially creating that foundation for the crypto space, so it's no longer a house of cards and just collapses anytime the market swings different ways. Now, on the topic of Paul Atkins, a confirmation hearing for Paul Atkins, the US President Donald Trump's pick to chair the Securities and Exchange Commission, is slated for March 27th after many delays, according to Eleanor Mueller. Now, Trump had essentially nominated Paul Atkins to lead the SEC on December 4th, but Atkins' marriage into billionaire family caused issues of financial disclosures and delayed his start date. So that is one of the reasons why essentially Paul Atkins was not able to get essentially to come in at a much more sooner time due to his billionaire family marriage. And it isn't clear whether the White House has produced those papers to the Senate. But Mueller said the slated hearing date is the most monumental we've ever seen so far. Mueller said one essentially former Senate Banking Committee staffer told her earlier this month that Atkins got named so early on that people are starting to wonder why is it taking so long for him. Turns out Paul Atkins had some family issues going on the reasons of why he wasn't going into the essentially the vote of will he become the SEC chairman or not, which is Trump's pick. So yeah, if you wondered to yourself, why is Paul Atkins taking so long? That was the reason. Now, we're going to move on from Paul Atkins, the SEC chairman, to the UK. Now, the United Kingdom has been moving at an incredibly slow pace. Even though the UK mentioned a while ago that they want to become a crypto hub no matter what. And the EU said the same thing, and the United Arab Emirates said the same thing, Singapore said the same thing, Japan said the same thing, Korea said the same thing, and now obviously the US said the same thing because of Trump, who's very pro-crypto. The UK is starting to show signs of movements when it comes to the crypto space. So here it is. The UK moves to tokenize government bonds with digital gilt pilot. Step-by-step process. The UK government is preparing to test digital gilts using distributed ledger technology, according to a Bloomberg report that came out today. Several financial firms have been invited to participate, including essentially Revolut, Wise, Stripe, and Zilch, following a meeting hosted by Chancellor of Excellence Rachel essentially Reeves at Downing Street. A policy paper released today outlines that the new investment, referred to as a digital, will essentially involve short-dated government bonds issued on distributed ledger technology platforms. The Treasury stated that the system will operate separately from existing debt issuance frameworks. Based on the documents, adopting essentially digital ledger distributed technology could streamline processes, improve liquidity, and expand market access. So this is what was said. The UK is leading the way on digital innovation and the creation of Digit. It will help to transform our world-leading capital market sector and drive economic growth, Reeves said from Downing Street. The UK Finance stated that automating bond issuance through digital through essentially DLT may reduce costs and broaden participation. Slovenia previously issued digital sovereign debt, and institutions such as the European Investment Bank and World Bank have conducted blockchain-based bonds as well in terms of trials. And the policy paper noted that digital bonds will be transferable securities held entirely on DLT platforms. The design essentially allows them to function independently from traditional issuance and processes serving as a test case for future debt market infrastructure. The UK plans to be issuing digital gilts within 2 years. Officials said consultations with industry participants will continue as development progresses for the United Kingdom. And HM Treasury and the UK Debt Management Office are now seeking input from market participants on available technological options and investor preferences to shape the pilot's design. The consultation aims to assess potential service requirements, explore the best approach to support broader DLT infrastructure developments in the UK capital markets, and determine the appropriate regulatory frameworks. Other countries are also looking at tokenized government bonds too. Projects in places like Singapore and Germany test how blockchain can make bond markets faster and safer. Switzerland is also testing on this matter, so is Singapore, so is United Arab Emirates. Supporters argue essentially digital guilds could reduce settlement times and risk essentially by recording transaction directly on secure digital ledgers. Some investors see this a way to make government bonds easier to buy and sell, which they definitely will. If you tokenize anything, it'll be 10 times easier for even the average Joe to be able to purchase it, to be fairly honest. The digital bonds could allow more direct access for both large and small investors. However, broader adoption will depend on clear regulations, reliable technology, and market adaptation. Now, to be fairly honest as well, it's not a recommended thing for anybody to be going back. Obviously not financial advice in any sort of way. It's not financial advice in any sort of a way. But if countries start essentially, going to this tokenization space regarding tokenizing their bonds, it's great for that country. It's not really something I would be going for in terms of buying essentially bonds from the United Kingdom or bonds from the United States or any other country out there. My focus will always mainly be on the crypto assets themselves that have utility purposes, contracts and licensing in place, like projects like XRP from day one. But in general, it's a positive way to be going forward with countries showing signs of tokenizing their assets. To be fairly honest, it shows that they are very acceptance of this digital market space and they are tiptoeing into it even further. And for a country like the United Kingdom, who has not done much inside the crypto space, to be fairly honest, at all. I mean, the EU is well ahead of the United Kingdom when it comes to any sort of crypto regulations. I mean, the MiCA regulations are pretty much well ahead of majority of countries around the world when it comes to regulations for crypto space. But it's nice to see the UK catching up and more countries joining that bandwagon. Now, before we talk about the next news, which is regarding companies coming back to the US, which is an interesting one to see, and it shows you that the US is once again becoming a great place for cryptocurrencies, because for the longest time under Biden's administration, companies were leaving the US and going to countries like the United Arab Emirates and putting up their headquarters in Dubai, for example. All companies were moving to Singapore because the Monetary Authority of Singapore was giving out licensing very easily and working their way through it to see what's right and what's wrong, but in the meantime giving out licensing. Same goes for Hong Kong and Japan's market space and so on. But it's nice to see that companies are once again re-entering the US market space, which shows that Trump is definitely creating a very good atmosphere for the crypto space, an atmosphere that they can grow and bring a lot of innovation inside the market space. That's essentially what he's telling the world when you see companies coming back to the US and not running away from it, which was what was happening under Biden's administration of circus freaks. So here it is. Key Rock, bold US expansion, first company that's moving back. A powerful move in the crypto market makings. Key Rock essentially is a crypto firm essentially that's based out in Belgium, that's now decided to expand into the US because under Trump's administration, they're seeing that growth and innovation happening. They're seeing the US be their next footsteps and not countries like essentially United Arab Emirates or Dubai and so on. So here it is. Leading crypto market maker Key Rock is making a significant leap across the pond, setting up shop in the United States. This isn't just another expansion, it's a strict move that speaks volumes about evolving landscapes of digital assets and regulatory clarity. The decision for a prominent crypto market maker like Key Rock to expand essentially into the US market is no small feature. It signals a major shift and growing confidence in the American crypto space. But then there are people inside the crypto space that say Trump is ruining the crypto space. Trump is damaging the crypto space. He's going to destroy the crypto space. But then you have companies coming back to the US because they see the bigger picture. This is why I always tell people, see the bigger picture. Trump is actually trying to build a strong foundation for the crypto space. So it's no longer a house of cards. because I would rather have a strong foundation that is built slowly and suddenly starts going up than a house of cards that keeps on swinging upwards and swinging downwards. And it shows you when companies are moving back to the US, it shows you the bigger picture. Several factors are likely at play, making this expansion a timely and a very good decision. Improved regulatory clarity. Whispers of more defined regulatory environments under Trump's administration seems to be gaining traction. This perceived improvement in regulatory clarity is a massive green light for the crypto firms looking to operate back inside the US. The location for essentially they're choosing to go into is New York. Choosing New York as the base for their US entity is highly strategic, essentially because New York is the global financial hub. It really is. New York is the financial hub, offering access to a vast pool of talent, institutional investors, and a vibrant crypto community. Leadership of Robert, having Robert at the helm of the US entity adds significant weight to this expansion, and his experience and leadership will be crucial, navigating these complexities of the US market space. The buzz around improved US crypto regulations isn't just wishful thinking. The reported formation of a new crypto task force within the SEC, spearheaded by Commissioner Hester Peirce, indicates a proactive approach towards crafting industry-specific rules, and this is a welcome development for the crypto industry, which has long sought clearer guidelines to operate within. And here's a breakdown of why this regulatory push is very significant. Hester Peirce, pro-crypto stance. Hester Peirce is often dubbed as the crypto mom. And it's not a joke. She's often dubbed as the crypto mom, and she is a part of the SEC. She was pro-crypto when Gary Gensler was in charge of her inside the SEC. And she would always go against Gary Gensler as a commissioner of the SEC, and he was the chairman of the SEC. So she's often dubbed as the crypto mom and is known for her supportive stance towards digital assets. Her leadership of this task force suggests a potentially more industry-friendly regulatory framework is on the horizon. Drafting industry regulations as a task force aimed to draft regulations is a crucial step forward. And currently, the lack of specific crypto regulations has created uncertainty and hindered growth. Clear rules of the game can foster innovation and attract more institutional investments, which they are. When you have companies like Keyrock moving from Belgium to New York. Reduced regulatory movements as well. Clear regulations can reduce the stifleness surrounding crypto assets, providing businesses with a more predictable and stable operating environment. This clarity is essential for long-term growth and investments inside the crypto sector. Keyrock's US expansion is a powerful signal of confidence in the future of crypto in the United States of America. It underscores the importance of regulatory clarity and the immense opportunities that lies ahead for the crypto market space in the US. As the regulatory landscape evolves, and firms like Keyrock pave the way, the United States is poised to become a major hub for crypto innovation and growth. And people say Trump is ruining the crypto space because they can't see the bigger picture. If there is anybody out there that is saying that Trump is ruining the crypto space because he's doing tariffs, because he's trying to, start a war with the Iran situation and so on, or any other factors in play, and you're saying Trump is ruining the crypto space, by all means, he's not. You just can't see the bigger picture. And there are companies out there that are seeing the bigger picture and they're moving to the US, a country that people would normally typically run, in terms of the crypto space, run from. Many crypto firms, I've lost count of how many left the US under Biden's administration, and they're all coming back to the US one by one because they're seeing the bigger picture. So if you are somebody out there inside the crypto space who is still crying about Trump trying to ruin the crypto space, stop listening to CNN and stop buying into the FUD and hype. Trump is trying to build a strong foundation for the crypto space, something that it's never had anywhere. Even Singapore, that's been giving out licenses to so many crypto firms out there. Singapore started giving out licenses from the monetary authority and then slowly realized their regulations don't really add up. So along the way, they kept on changing their regulations, which made this a house of cards. Whereas the US doesn't want to be a house of cards. It wants to create that financial hub for the crypto space, a strong foundation with 4 pillars to stand on. And that is why the SEC and the CFTC coming together after a decade, it shows signs of that. When crypto companies are moving back into the US, those are positive signs of what Trump's future plan is for America. And these CEOs and executives can see that bigger plan ahead. And there are people inside the crypto sector, inside the retail section, who are coming out and say, Trump is ruining the crypto space. Grow up. He's actually trying to fix the crypto space. You just can't see the bigger picture. If there are people out there that claim Trump is trying to ruin the crypto space, he isn't. He's actually trying to make it much more stronger, believe it or not. Company CEOs can see it, so should you. Now, and they're essentially, the amount of money they're going to be investing to move to New York, it's not a joke. Now, before we go through the next news, which is regarding CBDCs, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. We're more than happy to answer the questions you may have. So let's go inside the comment section first before we go through the next news, which is regarding CBDCs. Hey, let's see. Oh, okay, we're here. Let's go, CMF. Dazzle, good to see you. How you doing? How you been? Kamal says, I missed the live yesterday. Is there any news on European central banks and Ripple? Heard they approved the XRP ledger. A while ago, there was a company that is approved by the European Central Bank that does use essentially Ripple XRP ledger. So if that's what you're referring to, yes. Hi from Germany. Let's go, come on. Now, Bank of Korea. Bank of Korea to begin CBDC trials with 100,000 participants. Ironically, it's the exact same footprint that China did. When China wanted to introduce their CBDCs, they introduced it to about 100,000 participants. India introduced their CBDC to 100,000 participants. It's the same blueprint that all these countries are going to follow inside the CBDC world. And here it is. The Bank of Korea will begin trials for its central bank digital currency CBDC. The project will start from April to June, according essentially to local reports coming out of South Korea. The pilot, named Hangang, will involve 100,000 participants and 7 major local banks, including KB Kookmin, Shinhan, Hana Bank, by the way, Hana Bank is Ripple's partner, and Woori Bank. During the pilot, participants will be able to convert their bank deposits into tokenized deposits, which can be used to make payments at local vendors such as convenience stores, coffee shops, supermarkets, and online shops. So these are all the places that people can use their CBDC. The 100,000 participants can use their CBDCs. They can use it essentially at local vendors such as convenience stores, coffee shops, supermarkets, and online shopping. Payments will be made via mobile banking apps using QR codes. The trial seeks to assess whether distributed ledger technology can replace traditional settlement methods used by local banks, which currently rely on central bank reserves. The Bank of Korea representatives explained that tokenized deposits could reduce intermediaries in transactions and allow merchants to receive real-time settlements. The pilot will limit individual participants holding up to 1 million Korean won. If you're thinking that is a tremendous amount of money, it really isn't. It's about $689. So 100,000 participants will receive $689 each in tokenized deposits, which with the option to top up to a maximum of 5 million won. So it's basically 5 times 689. Participants will also be able to convert their tokenized deposits back into cash if they want to during this test period trial. Now, you might be wondering to yourself, why would they let the 100,000 participants essentially transfer their CBDC money back into cash? I mean, it doesn't make any sense. The whole point about CBDCs is about trapping the retail section into CBDC. So why would South Korea let the 100,000 participants take their CBDC money and put it back into cash if they want to during that test trial period? It's because they want to show the image of CBDCs are optional, cash will always be there. And in reality, they're just lying to your face. Cash is not going to be there. Depending on where you're living around the world, right now, the majority of restaurants, bars, clubs, gyms, businesses will only accept card. Also manufacturers as well. Showrooms, for example, like essentially automotive industry in terms of Lexus, for example, Toyota and so on, they only accept bank cards. Which raises the question of, if all of these showrooms, businesses, restaurants, bars, gyms, clubs, anything, if they're all leaning towards card only, And we're going into a CBDC world, and they keep on telling people, CBDC is optional, cash will always exist. So why are we moving away from cash before entering into a CBDC world if, CBDCs are optional? And we're moving into a digital world and putting cash to the side, and so many bank branches have closed down, so many cash points have closed down, yet they still tell people CBDC is optional and cash is always going to stick around. But yet again, businesses around you, or have essentially most of them have stopped using cash, and bank branches are disappearing, bank workers are disappearing, cash points are disappearing, which should really tell you that cash is not going to be sticking around, and CBDCs are not really optional. They're more like the only option going ahead. So the reason why they essentially inside this 100,000 participant study test regarding South Korea's CBDC, they've given the option for people to go back to cash regarding their CBDCs, is to give the illusion of, don't worry, you're not going to be trapped in CBDCs. This is just test trials. But in reality, you're going to be trapped in CBDCs. Because if you look at what's happening around you, it should give you the bigger picture of nobody's started to accept cash anymore. Bank branches are closing down. Bank workers are losing their job, and cash points are disappearing. So how are we supposed to be still sticking around in cash if we haven't entered the CBDC world and this is happening? But they want to give the illusion of, it's optional to use CBDC, so you can always go back to cash inside of this test period trial. Now, in addition to the CBDC trial, the Bank of Korea recently clarified that it has no plans to include Bitcoin in its foreign exchange reserves, citing that Bitcoin does not meet the International Monetary Fund's standards for reserve assets. However, the bank noted it will closely monitor discussions regarding of virtual assets in foreign exchange reserves. So, the Bank of Korea, alongside coming out with CBDCs, has said they're rejecting Bitcoin as a reserve asset totally. However, they're open to the idea of other assets being a part of their reserve. I can already picture what other assets are going to be part of the reserve. XRP will definitely be a part of the reserve. Because one, South Korean citizens purchase more XRP in some cases than they do of Bitcoin and Ethereum. And two, XRP is a part of America's stockpile. You could also say Bitcoin is a part of America's stockpile as well. But not many countries are fond of Bitcoin. Neither is the EU. But they're all very fond of CBDCs, and there's only one big major player behind CBDCs. With around 90% of the world's central banks exploring digital versions of their currencies, which is true, around 90%, according to Atlantic reports. The International Monetary Fund actually once said it's about 98%, but we'll go with the Atlantic reports. There is a push not to fall behind the advancements made by Bitcoin and other cryptocurrencies. However, technological complexities pose a challenge. Countries like Bahamas, Nigeria, and Jamaica, and essentially China, and a few other countries have already had operational CBDCs, with China conducting advanced real-life trials of their essentially EU1. The European Central Bank is also working on the digital euros. That's also going to be coming out in test trials this year. The Russian rubles is going to be coming out in test trials this year as well. The Brazilian DREC CBDC is coming out in this year essentially as well, test trials. And the Bank of International Settlements is undertaking multiple cross-border trials as well. So all these countries are coming out with their CBDCs this year in terms of 100,000 participants. At the same time, the Bank of International Settlements is doing multiple testings on cross-border payments. So while countries are doing domestic testings on their CBDCs with their citizens, the Bank of International Settlements is doing cross-border testings. You can see where this is going. Countries doing domestic testings for CBDCs, Bank of International Settlements doing cross-border testings for CBDCs. They're really getting prepared for this CBDC world. It's going to happen a lot more sooner than people always assumed, in terms of this year being a lot of CBDC releases. Meanwhile, the global banking messaging network SWIFT is also planning to launch a new platform for the next 1 or 2 years to connect central bank currencies to CBDCs, currently under development with the existing of financial systems. Good luck to SWIFT, because Ripple achieved that a very, very long time ago. The bigger they are, the harder they fall. Easiest way to put it. There's also that argument of, Ripple is working with SWIFT, and then, Ripple is going to help SWIFT's payment system excel a lot more faster pace and so on. But there's also the other argument that Ripple is going to overtake SWIFT. Both sides. And both sides have some sort of documentation on what they say. But the better thing would be for SWIFT to completely go away, because it has a bad rep. as I said previously, SWIFT is not a payment tool, it's a political tool. SWIFT is used to go around and sanction countries, which means even if SWIFT has the best CBDC platform out there, countries have difficulty trusting SWIFT because they know one day they will get sanctioned again by SWIFT. However, if countries start using the XRP ledger, they know that they can't be sanctioned. For example, if Russia starts using the XRP ledger, they know they can't be sanctioned. And any other country that starts using it, they know they can't be sanctioned. However, if SWIFT comes out with a CBDC platform, there's always that fear of you could be sanctioned once again, which means you would lose your payment systems in your entire country. Because when SWIFT essentially sanctioned Russia, Russia struggled for a slight bit because they had no payment infrastructure, essentially to be able to communicate with the rest of the world, which is why they started avoiding sanctions using crypto assets. So this is why I say SWIFT is not really a messaging tool or a payment tool. SWIFT has always been a political tool. And no matter what they do to SWIFT, no matter how much they ramp it up and give it the best payment tool out there, it's not a payment tool, it's not a messaging service, it's a political tool. And for that reason, SWIFT will be pushed aside. And companies like Ripple will take over with the XRP ledger because they can't go around and sanction companies or even sanction essentially countries or governments. Well, for the time being. Now, this is why I've always said the XRP ledger is going to be a better player in terms of CBDC world, or Ripple in general is going to be a better player in terms of CBDC world than companies like SWIFT, because one's a political tool, whereas the other one is an actual payment tool. Now, China's central bank integrates AI and digital finance is what we're going to talk about next. AI is definitely taking, in multiple sectors, we are starting to see AI. In terms of the health sector, we're starting to see AI. The tech firms are starting to see AI a lot more. Institutions are using AI a lot more. And even Morgan Stanley uses AI in terms of test periods to see, if AI could do a lot more better than a professional trader can do when it comes to the trading floor. So in every aspect, we're starting to see that AI wave happening. And one sector that China is trying to integrate is their central banks. So to give you a perspective, a very long time ago, when China was the only country that had a CBDC. When China's central bank was the only country with a CBDC, I said, if you want to see where your countries are headed, look at China. This is what I said to people about 2.5 years ago, about 2 years ago. I said, and this was no other country had a CBDC whatsoever, and China was the only one with a CBDC and test trials on a social credit system. And I said, if you want to see where your country is headed, look at China, because whatever they do, you're bound to follow their footsteps into this digital world. And when China essentially did the CBDC, social credit systems, and so on, they went further into the AI in space, everything else. What I'm trying to say, if China is doing this, you're going to be seeing this happening in your jurisdictions as well. Not, instantly, but over time. Because after I said that, we had the UK, the EU, the US, Canada, Latin American countries, Asian countries, Middle Eastern countries, everybody going to CBDCs. And China was the first one. And when they were the first one, I said, every country is going to follow their footsteps. So here is essentially the new venture that China is going towards. The People's Bank of China, which is their central bank, announced its plans to integrate AI technologies within its digital finance infrastructure. The goal is to enhance financial security and operational efficiency by 2027. Now, 2027 is a very key date because Santander Bank, Barclays Bank, HSBC Bank, NatWest Bank, Lloyds Bank, and a few other banks came out once a very long time ago and said by 2027, there's going to be no more bank branches on the high street. By 2027, there's going to be no more bank branches on the high streets, is what these banks stated. Which means by the year 2027, we should be fully into some digital infrastructure. We should be a lot more inside a digital infrastructure. Which is why it's a key date. When anytime any central bank mentions the date 2027, you should get that indication. Even the Bank of International Settlements once stated as well. Key players involved include China's top financial regulators and technology companies tasked with developing AI solutions. This integration signifies a shift towards more advanced digital banking practices. Immediate effects include increased investments in China's fintech sector. Market analysts speculate on a ripple effect inside the global banking systems, prompting other nations to consider technological advancements as well. They're definitely going to. This development may influence financial policies worldwide and redefine competitive strategies. Stakeholders express concerns over data privacy and the need for comprehensive AI regulatory frameworks. Similar technological shifts, like the rise of blockchain, have transformed financial landscapes like ever before. And China's move mirrors past global tech-driven changes that reshape the banking systems. John Doe, chief economist, People's Bank of China, stated, "We aim to integrate AI into our digital finance strategies to enhance efficiency and security." Experts highlight the potential outcomes such as increased financial innovation and improved global competitiveness. Historical trends suggest that the integration of tech in finance often results in essentially enhanced efficiency and customer experience. In the most simplest way, a lot of people are going to become jobless. By the time we get to the year 2027, a tremendous amount of people are going to become jobless, which is why you want to be inside the crypto space and you don't want to get left behind. If you get left behind from the crypto space, you're bound to be stuck on CBDCs, especially if you lose your job to AI. Eventually, the only wage you're going to be making is the wage that the government gives you because you're jobless, because you lost your job to AI. And if the only wage you're making is from the government, and you could be a doctor, you could be a banker, you could be a teacher, you could be whatever field you're in, unless you're, essentially doing this in private matters. So, for example, if you are a private teacher, you're perfectly fine. If you're a private doctor, you're perfectly fine as well. If you do anything in terms of private and personal, you're perfectly fine. But if you work in an establishment or an office or in a hospital or in a bank, you're bound to lose your job. And if you do lose your job, and essentially the only wage you're going to be getting is the government wage afterwards, because there's no jobs out there because AI is taking all of it, which means the government wage is going to be CBDCs, which means they're going to have a very fun time at controlling you. So which means the next time we have a COVID situation, a planned virus situation, which is what COVID-19 was, the government will just freeze your accounts because it's CBDCs, which means if you even decide to go outside, your money doesn't work. Which is why you don't want to be trapped in CBDCs. Instead, you should be going inside the crypto space and exploring the crypto space and understanding that a lot of change is about to be happening. And if you are somebody that has that 9-to-5 job, you could be on the verge of losing it eventually to AI, genuinely. And later on, your only wage is going to be from the government, which is the government is going to be controlling that money with, essentially their CBDC capabilities, because all CBDCs are programmable. Which is the next time, essentially, genuinely, the next time we have some sort of COVID-19 situation, and you decide to leave your house and say, I don't care about, COVID-20 we're going to be having, because we had COVID-19 already. The next time we have a COVID situation like COVID-20 or COVID-22 or COVID-27, and you decide to leave your house, it's not going to work. Your money's not going to work because it's CBDCs. And if you think to yourself, the government can't freeze my money, that's against human rights. That's against the Constitution. If you're an American, that's against everything that we go for. Well, if you really think about it, what happened to the Canadian lorry drivers when all of their bank accounts were frozen and they couldn't pay off any of their essentially mortgages or loan or rent or buy food for their family? The government froze people's bank accounts to make a point. Freezing their CBDC wallets would be a walk in a park. So this is why you want to be essentially in cryptocurrencies before this digital future starts taking off. And you specifically want to be inside of XRP because it's the backbone of that CBDC world. And even though America has stated that they don't want to enter the CBDC world, nobody has a choice. CBDC is going to happen no matter what. Because America will eventually come to the conclusion that if every country is about to go into CBDCs, which they are, according to the International Monetary Fund, 98% of centralized banks are in CBDCs, which means if America still wants to remain the top contender in the digital world, they have no choice but to be inside of a CBDC world. This is why I've said a long time ago, doesn't matter who you are, you can't stop a CBDC world. It's bound to happen. So you want to be inside of XRP before that CBDC world starts taking off. Now, moving on to something else inside the market space that could cause volatility, which is The war that's coming to an end with Russia and Ukraine, and Putin essentially had a conversation with Trump today, which we discussed yesterday. Putin and Trump are going to have that conversation today. Now, we've got the word back of that 1 hour conversation they had, or 2 hour conversation they had on the phone, and a few things have been answered. So yesterday I was explaining to everyone that the Russian and Ukraine situation is coming to a pause for about 30 days. And I said, when this war is about to be ending, another war is actually brewing in the backgrounds. And the second war that's brewing in the backgrounds is Iran versus the US. Trump wants, as I said previously, to remove the Iranian government and wants to replace them with the king of Iran, the crown prince of Iran, the Shah of Iran, which is 1,000,000,000% a better idea. And NATO has even stepped in to say that, you know, they will help the king of Iran to land back inside of Iran when the time comes. And that the Iranian government is getting very, very close to nuclear power. Now, why am I mentioning all of this based on the phone conversation of Trump, essentially, and Putin? Well, because yesterday I was also asked a question on this live of, you know, regarding Russia and China. They're backing Iran. So is the US going to back off because, you know, China and Russia are backing Iran in their newest contracts? And I said yesterday, I said no. Trump himself has said he doesn't care that Russia and China are backing Iran in any sort of a way, and that if it has to come to it, he will use military power in Iran. And obviously, Iran will get obliterated. Essentially, honestly, Iran will get flattened if the US did decide to do that. And I'm, you know, just to put in perspective, I'm Persian myself. If you watch this for the first time ever, I'm Persian, which means I'm Iranian. So, you know, I'm not saying this against other people or some random country. It's my own, essentially. And I've just been fairly honest of what the US's capabilities and powers are. You know, obviously people online will say Iran will win this war and Russia is stronger than the US and China is stronger than. In reality, they're not. They're just not. It's embarrassing to even suggest that Russia and China and Iran are stronger than the US. It's just embarrassing to even mention. If you just see the budget that the US spends on their military compared to those 3 countries combined, you will laugh your head off. So there's no chance of essentially Russia, China, and Iran winning this war in any sort of a way. And I also said yesterday that Putin will back down from backing Iran. Yesterday, I said, when I was asked the question of, you know, what about China, Russia backing essentially Iran? I said Putin will back down straight away because it's in favor of Putin to back a country like the US and Trump rather than to back a country like Iran because the Iranian government. And to be fairly honest, the majority of the Iranian people want to remove the Iranian government, but they're struggling to do it, so America has to step in. Also, I said it's in favor of China to back down from backing Iran as well, because I said China is the biggest exporter of the world, which means if China gets sanctioned for backing Iran, it will be a nightmare for China's crippling economy. It would genuinely cripple China's economy if they got sanctioned, because that means that China can't sell to any country, and they're the biggest exporters, which means China has produced so much and they can't sell to no one because they're sanctioned and barred from selling to any country out there, which means China's real estate economy, which is putting a lot of pressure on China, will cripple them because their exports are not helping them in any sort of a way either. So Putin, I said, will back down yesterday, and I said China will back down as well because it's in their favor to do so. Today, Trump had a conversation with Putin. And in that conversation, Putin came to the same conclusion of what I said yesterday. And Putin has sided with Trump. Putin said in the 2-hour or 1-hour phone conversation that they had, essentially, with Trump, Putin said it's in favor of Russia to side with the US and not Iran. Exactly what I said yesterday. It's in favor of Putin to side with the US. Putin, on a phone conversation today, said to Trump, they're better off being the US's ally than backing Iran, even though they have a contract together, Iran and Russia. And that was the Iranian government's pathetic attempt, to still stick around, to sign a contract with Russia and China to prove that they're going to stick around no matter what. And that was a pathetic attempt. But Putin has already backed down. And China's going to back down because they have no choice. Otherwise, they're going to get sanctioned. Because for working with an illicit nation, for example, illicit government nation, and they can't sign anything which will cripple their economy completely. So here it is. Trump, Putin on the same page about Iran's nuclear weapons and capabilities, White House says. President Donald Trump and Russian Vladimir Putin are in sync when it comes to Iran obtaining nuclear powers, according to the White House. Trump and Putin, who spoke over the phone Tuesday morning, about how to draw an end to the war in Ukraine first, agreed also that Iran must not obtain access to weapons, the White House said. Even though Iran signed a contract with Russia to show their military power to the world, Putin has said to Trump on the phone today that Iran should not be able to obtain any weapons whatsoever, even though, a few days ago they were showing military power to the world, Iran and Russia and China together. And today Putin caved and said, yeah, don't worry, we're with the US. We're not going to be supplying Iran in any sort of a way, any weapons, and they should not be in control of any nuclear power either. It's exactly what I said yesterday. Trump and Putin, who spoke over the phone, essentially on that matter, agreed on those matters, and the leaders spoke broadly about the Middle East as a region of potential cooperation to prevent future conflicts. The White House said in a statement after the call, they further discussed the need to stop, essentially, of all the weapons that will engage with others to ensure the broadcast possible, essentially, application. And the two leaders shared the view that Iran should never be in charge of any position of power. The Iranian government. The Defense Intelligence also released a report back in 2023 detailing how Iran had given Russia access to hundreds of one-way attack air drones. Although Iran denied, obviously Iran's government always denies everything, but they're always backing illicit groups. This is why the Iranian government needs to be removed ASAP, and they need to be replaced by the Shah, the king of Iran. The royal family of Iran needs to come back. Although the Iranian government has denied ever essentially helping Russia in the Ukraine situation, defense intelligence agencies based in the US said it obtained debris from attacks in Ukraine that clearly proves Iran supports the wars that's been happening in Ukraine and backing Russia. The funny part is, even though Iran backed Russia in the Ukraine war situation, Russia's not willing to back Iran and decide to side with Trump instead. Putin got help from Iran, and essentially in terms of weaponry for the Russian war. When it came down to it, Putin is backing Trump, not Iran, even though they got weapons from Iran for the Ukraine war. The Defense Intelligence Agencies also on that matter, Trump cautioned in February he believed that Iran was close to developing a nuclear weapon, and his administration reinstated a maximum pressure campaign against Iran through sanctions targeting Iran's oil, essentially, exports in February. Additionally, Trump revealed March 7th that the nuclear deals with Iran could emerge in the near future, and that he sent a letter to the Iranian supreme leader as well, essentially urging Tehran, the capital essentially of Iran, to agree to a nuclear agreement. But the time is happening now, Trump said. The time is coming up, he said. Something is going to happen one way or another, Trump said. I hope that Iran's government, and I've written them a letter saying, I hope you're going to negotiate, because if we have to go in militarily, it's going to be a terrible thing for them. So, the second war that's brewing up is, after the Ukraine and essentially Russia situation, is the Iran war. Now, that's going to have positive effects in the long term. The positive effects of the essentially Iranian government being removed, and let me just make it one more time clear, the Iranian people hate the Iranian government. The majority of the Iranian people who have brain cells hate the Iranian government, despise the Iranian government. The majority of the Iranian people despise the Iranian government. They hate them, but they can't remove them because they won't let go of Iran. Now, with countries like the US stepping in, obviously the US is stepping in their favor as well. By removing the Iranian government, they can stabilize the Middle East and no more illicit activities. And replace the Iranian government with the Shah, the king of Iran, which lives in Beverly Hills in America, which is also, he's very close friends with Trump. The king of Iran, the crown prince of Iran, is very close friends with Trump. And that is why Marco Rubio, the man who's been behind the whole Trump essentially and Russia and Ukraine situation talks, Marco Rubio also mentioned that he wants to help to remove the Iranian government and essentially liberate the Iranian people from this terror group that's controlling Iran essentially in general. But obviously the news will tell you otherwise and say, why is America interfering into, the Iran situation? Well, it has two reasons. One, it will stabilize the Middle East. No more wars will happen in the Middle East. If you remove the Iranian government, no more wars will happen in the Middle East because they finance a lot of wars. And they always pretend they have no idea about it. And they have no choice, to be fairly honest. I mean, the US is about 1,000 times more powerful than the Iranian government. 1,000 times. If you just look at their budget of the essentially military of the US compared to GDPs of countries around the world, you'll get a better idea on that matter. But in general, that is the next war that's starting up and is brewing up right now. The Iranian government isn't backing down either from the whole Trump demands. The Iranian government actually believes in their deluded, delusional world they have a chance against the US military. And there are obviously people out there that would claim the US lost against, as I said previously, the US lost against Afghanistan or other countries out there. The US never lost against Afghanistan. They never went to Afghanistan to win the war. They could have done in 2 hours if they wanted to, but they decided to use Afghanistan as an intelligence base between Iran and Pakistan. If people just use their brains, they would realize that America infiltrating the Afghanistan was not about winning the war. They were using Afghanistan as a base for intelligence purposes, because where is Afghanistan located? One side Iran, the other side going to Pakistan. They were using Afghanistan as an essentially intelligence base, not to go in to win a war. Intelligence is a lot more valuable than collapsing Afghanistan in 2 hours. Now, but obviously, CNN and, people on TikTok and people on X will tell you different things, but those people have zero clue of what they're talking about. Now, but that is the next war that's brewing up, essentially, and that's going to have implications on the market space. It's going to have, depends again on the market space, because if it's a domestic scenario where the people of Iran remove the Iranian government, then it wouldn't have any sort of effects on the crypto market space or the stock market. But if it's an international situation, then obviously it's going to have implications on the market space. Bitcoin is going to get volatile again. Gold is going to go up because it's an actual safe haven. The US dollars will also become a safe haven in that scenario as well and get strengthened. Now, fintech and crypto firms is what we're going to be talking about next. But also, genuinely, Putin and Trump being on the same page is excellent news, because it means that energy prices will come down, especially in the EU and the UK. The reason why we experienced high gas prices and high energy prices in the UK and in the EU was because, for some oddly stupid reason, the EU and the UK decided to start a war by backing essentially Ukraine against Russia. The company, essentially the country that provides them with energy. It was the most stupidest war possibly to date. But with Putin and Trump being pals again slowly, it will lower the energy prices in the UK essentially and the EU. That's only if the UK and EU back down. Because if they're really trying to end the war, why start it up back again when it comes to the EU? Because right now, the EU and the UK is buying their oil from India. India is buying their oil from Russia. We could buy the oil directly from Russia and it would be cheaper. But for some stupid reason, we're buying the oil from India, which India gets it from Russia. And we're paying more. Hence our energy crisis situations. Do you see how stupid this whole war is with Ukraine and Russia? So Putin being friends with essentially Trump is amazing news. But the BBC will tell you otherwise. CNN will tell you otherwise. NBC News will tell you otherwise. And they say Trump is a traitor. He's making friends with Putin. But it works out in the favor of the retail section, because Trump and Putin actually had conversations about energy. These two massive countries and massive powerhouses being friends is a positive for the world. But continuing the Ukrainian-Russian war is a stupid idea, because it puts more pressure on the retail section, especially in the EU and the United Kingdom. The war comes to an end, sanctions will be lifted, energy prices will come back down again, which means you won't be extorted to these prices And we're not buying our oil from India, who's buying it from Russia. Even the BBC did a report on it. The BBC came out with a report that India is buying their oil from Russia and selling it back to the UK. So why don't we just directly buy it from Russia? Why start a stupid war with Russia? Honestly, it's just putting more pressure on the retailers. And there are people who are in favor of this war. There are people going, because they believe the BBC, they believe essentially all these media companies out there, and they're going, yes, it's a good thing going, and starting a war with Putin. We should be backing Ukraine. Trump is a traitor for trying to end this war. The ironic part is, before Trump became president, the majority of the people wanted to end the Ukraine and Russian war. And now that Trump is president, there are people coming out, a lot of people coming out and saying Trump is a traitor for trying to end this war. You see how easily people are influenced and brainwashed by the media around them or by people around them? Where before Trump becomes president, they want to end the war with Ukraine and Russia. Trump becomes president, they're in favor of the war with Russia and Ukraine. It's like people almost want to pay more money for their energy for no apparent reason. But in terms of energy, it's in favor of us. So as much as Putin, and I'm not saying Putin is some sort of angel in any sort of scenario. Nobody is. Nobody's perfect. Nobody's an angel in this scenario or whatsoever. But in terms of business, it works out for us. In terms of energy, it works out for us. And America is going to be making a lot of money from Russia as well, in terms of the aluminium they're going to be receiving and other essential precious metals they're going to be receiving from Russia. Russia has a massive agriculture space as well, which used to provide to the EU, but then we stopped that for some reason as well. But yeah, in this scenario, look, nobody's an angel. No politician, no prime minister, no president, nobody's an angel. But this works out in our favor. Energy prices come down. America also benefits, not just the EU and the UK benefiting from this deal, this war ending, but America also benefits from precious metals from Russia as well. Now, what we're going to be talking about next is fintech and crypto firms seeking bank charters under Trump's administration. And a report that's came out by retainers as well. But before we talk about that, let's go start the comment section first, and then we go straight into the next news. Let's see where we were at. We were at here, even Miles and Miles. If I have 1,000 XRP, can you store them on 2 different cold wallets? Can do if you want to. Sure, why not? Not suggested if it's 1,000 XRP, but you can do if you want to. Why not? Even Miles and CMF, Pierce, good to see you. How you doing? How you been? That's great. Russia supports us. Will make easier for us to get their job done. Hey, crypto fan. Good to see. How you doing, Julian? I'm not a Putin fan. If you serve the intelligence field, you understand that Putin is KGB, old school, and has an agenda and does not benefit America. He does benefit America, Scott, in terms of precious metals America is going to be receiving, and energy prices will be beneficial, obviously, for the EU and the UK. Good information tonight, as usual, killing it. Let's go, Professor. Look at making money. I guess it's easy to overlook Putin and his ways, and to justify it by saying no one is perfect. I wonder how far that statement would go for another person. Are you referring to somebody else? Yes. Look, as I said previously, nobody's perfect. But at this point in time, all that matters is energy prices come down. That's all that matters. Energy prices come down. America gets their precious metals deals, and we're no longer being extorted by buying oil from India, who gets it from Russia. As I've explained it before, it's like sitting at a family table dinner. The simplest metaphor I could give. It's like sitting at a family table dinner, and you're sitting across a person you don't like. And there's a person in the middle, and you ask the person in the middle to pass you the salt, which is in front of the person you don't like. When in fact, you could just ask the person in front of you to pass the salt. If you're wondering what kind of metaphor is that, it's basically the simplest way to put it is the EU, instead of directly buying oil from Russia, they buy it from India, who gets it from Russia. It's just stupid in general. Fintech and crypto firms seek bank charters under Trump's administration is what we talk about next. Financial technology and crypto firms are increasingly applying for state or national bank charters, despite the community's historical resistance to decentralized banking. Financial technology and crypto firms are applying for state or national bank charters, aiming to expand essentially their businesses under more crypto-friendly Trump's administration, as industry executives report a notable uptick in their charter discussions and applications, Retainers reports. We have seen a lot more interest. We are working essentially on several applications now, and Alexandra essentially Steinberg, a partner at a law firm, told retainers, however, firms are being cautiously optimistic as regulatory agencies and leaderships change unfold. What I'm essentially reading out to you is crypto companies in the past struggled to open up bank accounts. And if they did over a time period, they'll be closed back down again because the CFPB and the FDIC would tell banks not to help crypto companies to open up accounts for them or operate anywhere around them. But obviously now no longer Biden administration is applying, the Trump administration is in place, and Trump's administration has made it very clear for banks to start working with crypto companies. And in fact, after that White House crypto summit, the first one that ever happened, and people said it was useless, there was no point of a crypto White House summit at all, nothing amazing was announced, everything was announced in that White House crypto summit. People just missed the ballpark on it because people were expecting Trump to come out and say he wants to buy 1 billion of Bitcoin, 1 billion of XRP, 1 billion of so on and so on and so on. And that was never going to happen. It was all about regulations and transparency and so on. Straight after that White House crypto summit, the OCC came out and said the banks that can start using crypto assets, start going towards crypto companies and so on. That's the positiveness you saw from the White House crypto summit. But again, a lot of people missed the ballpark on that. So fast forward to this, where crypto companies are now lining up to work with banks in the US. So becoming a bank brings stricter regulatory oversight, but it can reduce borrowing costs and enhance legitimacy. Banks' charters allow firms to lower their cost of capital by accepting deposits, yet assessing these as a major point of contention in the crypto community. Various cryptocurrency firms have over time resisted essentially becoming banks over the regulatory oversight associated with the move, choosing instead to follow the industry's efforts to further decentralize and improve access to financial services to unbanked or unbacked individuals. Cryptocurrency firms, including Paxos, Anchorage, and a few other ones, have become federally regulated crypto banks after securing a federal trust charter through the U.S. Office of Control of the OCC. Kraken and Avinti have secured also special purpose depository institution charters in Wyoming, making them a state-regulated crypto banks. Historically, new bank charters have been rare. Between 2010 and 2023, regulators approved an average of only 5 annual compared to 144 per year from 2000 to 2007, according to S&P Global. Applications dwindled due to low interest rates and probability concerns and regulatory hurdles. The Federal Deposit Insurance Corporations, the FIDC, and the Federal Reserve's officials have signaled support for streamlining the process with crypto companies working with banks, or even certain crypto companies becoming banks. However, setting up a new bank remains expensive, with costs ranging from $20 million to $50 million, or in some cases, $200 million, according to recent reports. But crypto companies are leaning in favor of either becoming banks and also working with banks a lot more inside the United States because of Trump's administrations and their pro-crypto policy campaign. Now, moving on from that to the news that's also come out today regarding the exciting crypto ETF expansions from Hashdex, as it adds essentially Litecoin and XRP and more to his Nasdaq fund. Hashdex, a well-known essential cryptocurrency asset management firm, is making waves with its latest moves. They're not just sitting still. They're actively expanding their offerings to gain essentially investors a broader access to exciting world of digital assets. And the buzz is all about their Nasdaq Crypto Index ETF, which is set to welcome a host of new cryptocurrencies in the field. So, who are the contenders joining Hashdex ETF party? According to recent essentially amendment filings, Hashdex is seeking to incorporate these popular cryptocurrencies. Litecoin, one of the earliest cryptocurrencies often seen as the silver to Bitcoin's gold, known for its faster transaction speeds. XRP, a cryptocurrency focused on payment solutions aimed to facilitate faster and cheaper cross-border payments. Solana, a high-performance blockchain known for its speed and scalability, supporting a wide range of decentralized applications. Cardano, a blockchain platform emphasizing essentially security and sustainability developed through research-driven principles. Chainlink, a decentralized coral network that connects essentially smart contracts with real-world data. Avalanche, AVAX in other words, another fast and scalable blockchain platform designed for building decentralized finance applications and enterprise solutions. Uniswap, the governance token of Uniswap, a leading essentially decentralized exchange DEX protocol on Ethereum. All of these are going to be added to the hashtags ETF. Now, this is a diverse selection covering different sectors within the cryptocurrency market sector, from payments to smart contracts to decentralized finance and corals. Adding that these coins to the hashtags ETF significantly essentially broadens its scope and potential appeal to investors with varying interest within the crypto space. And hashtags moves to expand its Nasdaq crypto index ETF is an exciting development for the cryptocurrency investment space. By adding Litecoin, XRP, Solana, Cardano, and other prominent cryptocurrencies, they are creating a more diversified representative product for investors seeking exposure to digital assets through traditional ETF structures. This expansion is not only broadening essential investment opportunities, but also signals the continuation of matureness inside the market space and the integration of cryptocurrencies into mainstream finance. As the crypto markets continue to evolve, products like the hashtag essentially ETF will essentially likely play an increasingly important role in facilitating a wider adoption of and access to its dynamics and asset classes. Also, on the subject of XRP being added to this hashtags, 83% of institutions plan to up their crypto allocations in 2025. So, again, people who state Trump is ruining the crypto market space with his tariff plans, and instead he's actually trying to fix it in the long term, America's market space especially. 80% of institutions are planning to put more towards crypto allocations, which should tell you if Trump was trying to ruin the market space, ruin the stock market, ruin the crypto market space with tariffs and other plans he has, then 83% of institutions will not be lining up to add more to their crypto portfolios or to even enter the crypto space. Or the other companies that decide to move back to the US. These are all positive news that obviously CNN will never report on, neither will NBC or The View or any of these decision news channels. So here it is. Institutional investors are increasingly bullish on cryptocurrencies, even though there are people inside the crypto space that say Trump is ruining the market space, with 83% saying they plan to up their crypto allocations in 2025, according to a report that's came out by Coinbase. So it's not a random report by a random analyst. Coinbase is the one that's done this report. So here it is. Already nearly 3/4 of firms essentially surveyed said that they hold cryptocurrencies other than Bitcoin and Ethereum, and a significant majority of them said they plan to boost their crypto allocations to 5% or more of their portfolios, the report said. They are motivated by the view that cryptocurrencies represent the best opportunity to generate attractive risk-adjusted returns over the next 3 years, according to a report from Coinbase. Coinbase, the US's largest crypto exchange, based essentially on these findings, on the interviews with more than 350 institutional investors. In January, they did this report. Among institutional altcoin holdings, XRP and Solana were the most popular in the survey found. Ironically, XRP was more popular than Solana. So Coinbase does a report with 350 institutions of, are they going to be expanding their crypto wallets? Are they going to enter the crypto market space in 2025? 83% of those institutions said yes, they're going to expand and enter the crypto market space out of 350 institutions. And the number one token out of, essentially the survey was done and conducted, the number one token institutions said they want to go more towards in 2025 was XRP. Altcoin holdings could rise even further in the US. Regulators essentially approved planned exchange traded funds, ETFs, listings this year. Asset managers are awaiting a green light from the US SEC to list more than a dozen proposed altcoin ETFs. Litecoin, Solana ETF, XRP ETF are seen as the most likely to see near-term approval according to Bloomberg Intelligence. And the Chicago, essentially CME Group, the largest US derivatives exchange by volume, launched futures contracts tied to Solana, essentially marking a significant step towards institutional adoption of the altcoin. Meanwhile, stablecoins continue to see institutional uptake, with 84% of respondents either holding stablecoins or essentially exploring doing so, the survey found. And according to the report, institutions are using stablecoins for a variant of use cases beyond just listing crypto transactions, including generating essentially yield, 73% foreign, 73% generating yield, foreign exchanges 69%, internal cash management 68%, and external payments 63% in December. Investment bank Citibank said stablecoin adoption will accelerate on-chain activity, including decentralized finance. The survey found that only 24% of institutional investors currently use DeFi platforms, but that the figure is expected to grow to nearly 75% in the next 2 years. Institutions are attracted to DeFi for the myriad reasons, citing derivatives, stakings, and leading as the use cases they are most interested in, followed closely by access to altcoins, cross-border settlements, and yield farming, the report said. So, a report comes out by Coinbase, a study tested by 350 institutions were involved in this study test of will you enter the crypto space in 2025, or if you're already in it, will you expand? 83% said hell yes. Out of those 83%, the number one token pretty much chosen for their allocation to be towards, or what they're looking towards, out of the study test, XRP got a higher ranking, even against Solana. Now, on the topic of XRP, this one is just absolutely gold. Ironically, the news is also about gold. XRP and gold shine as Bitcoin struggles in 2025. Now, you might be wondering to yourself, what the hell do I mean by that? XRP and gold shining and Bitcoin not so much. Well, while many asset managers, essentially while major assets have struggled in 2025, XRP and gold performance has surprised the crypto and traditional financial markets so far, since January until now. Despite years of criticism, especially from Bitcoin maxis, these two assets have proven to be resilient. XRP has always been criticized by Bitcoin maxis, and gold has always been criticized by Bitcoin maxis, because Bitcoin maxis want to tell the whole world that Bitcoin is better than gold, and that Bitcoin is digital gold, and that Bitcoin is a risk-off asset, and that Bitcoin is a safe haven. But as I've said many, many times, Bitcoin doesn't act like a risk-off asset in any sort of a way. Bitcoin doesn't act like a safe haven in any sort of a way. And it's not really digital gold because it doesn't react like gold either. I said this for the easiest, essentially, point I could make. Or the easiest point I could make. I said to be a risk-off asset or a safe haven like gold. I said if two countries go into war, I said if China attacks Taiwan tonight, I said if China attacks Taiwan tonight, China missiles Taiwan tonight, I said what happens to the price of Bitcoin if it's a safe haven? The price of Bitcoin will go down. What happens to the price of gold? It will slowly go up, because gold is an actual safe haven, while as Bitcoin will always pretend to be a safe haven. It's very simple, because so many Bitcoin maxis will tell people it's digital gold, it's a risk-off asset, it's a safe haven when it comes to Bitcoin. So why doesn't it react like any of those categories? Honestly, it's a simple question to ask any Bitcoin maximus who's out there saying Bitcoin is a safe haven, is better than gold. If China missiles Taiwan, if Russia missiles the EU, let's just say Russia and EU war starts tonight, Russia missiles the EU missiles Russia, what happens to the price of Bitcoin? If it's a safe haven, it comes down. What happens to the price of gold? It goes up. Why? Because gold is a real safe haven, while as the other one is pretending to be one, which is Bitcoin. Bitcoin maxis lie a lot. They genuinely lie a lot, too much. And people eat it up. Honestly, people who listen to Bitcoin maxis eat it up. But it's a simple question to ask any Bitcoin maxi. If Russia missiles Germany tonight, Germany decides to go into war with Russia tonight. Germany missiles Russia, Russia missiles Germany. What happens to the price of Bitcoin? If it's a safe haven, it comes down. What happens to the price of gold? It goes up. Why? Gold is a real safe haven. What is Bitcoin? Pretending to be a safe haven. It's a simple equation. It's not rocket science. So, but then again, Bitcoin maxis, honestly, Bitcoin maxis lie so much. It's ridiculous the amount of BS that comes out of their mouth. Because if we want to be transparent about the entire crypto space, and when you want to be transparent about XRP or XLM or XDC or Solana or Cardano or let's be transparent about Bitcoin. There's so much lies around it. It's not a safe haven. It's not a digital gold because gold doesn't react like that. And it's not a risk-off asset. Bitcoin is a risk-on asset. There's a difference between risk-off and risk-on, and Bitcoin doesn't react like a risk-off asset. It's extremely volatile. It's the complete opposite of a risk-off asset. But honestly, it's a very simple equation. Russia missiles France, for example. Forget Germany, Taiwan, China. Russia missiles France. France missiles Russia tonight. What happens to the price of Bitcoin? It comes down. But isn't Bitcoin supposed to be a safe haven? Isn't Bitcoin the digital gold? No. Gold will actually go up. Not suddenly, but instantly, not instantly, but it will go up slowly. Because it's a real safe haven. Not one that pretends to be a safe haven. Honestly, Bitcoin maxis lie too much. And somebody needs to call out on their BS. And there's that one guy who's a Bitcoin maxi who keeps on making videos and cries about XRP. Everybody's seen that guy. I don't know what his name is, and if I did know it, I'm not going to mention it. But there's that one guy who's a Bitcoin maxi who keeps on making videos about XRP and cries and goes, why is the US accepting XRP? Bitcoin is the only asset. It's a safe haven. It's a digital gold. It's decentralized. Nobody can do anything to it. This guy lies so much. And why does he cry in every video about XRP? What's up with that one? He lies and cries at the same time. For what? So we can show empathy towards him? He BS's in his videos. Honestly, the amount of lies from Bitcoin maxis is ridiculous. And somebody needs to be calling out them. And as I've said many, many times, unfortunately, because we don't have regulations, we don't have pretty much any regulations for domestic purposes of crypto assets or international purposes. And some countries have some regulations, some countries don't have any regulations for the crypto space. They're still trying to figure out the regulation part. Because we don't have regulations, cryptocurrencies can't detach themselves from the speculative asset they're following, which is Bitcoin. If we get regulations, as I said 2 years ago, I said somewhere down the line, we get regulations, which is this year. Slowly, we've seen that regulation side. 2 years ago, I said if we get regulations, it will start essentially detaching itself. I said essentially XRP will detach itself from Bitcoin, XLM will detach, HBOT will detach, Cardano will detach, Solana will detach. All these crypto assets with utility and contracts and licensings will detach themselves from Bitcoin with regulations, because regulations will lead to adoption in terms of their utility. And if XRP, for example, is being used as a medium of payment for international purposes, then if anything happens in this world in terms of economic pressures or a war scenario, or Bitcoin is just once again becoming volatile, an asset like XRP that's being used, now there's regulations 24/7 as a medium of payments, it wouldn't really get affected by Bitcoin's footsteps because XRP is being now used and utilized 24/7. Same goes with an asset like HBOT. If it's being utilized 24/7 under regulations by institutions and banks worldwide, then it wouldn't be affected by Bitcoin's footsteps. Same goes with XDC. Same goes with XLM. Same goes essentially with the multitude of assets out there. For example, even AVAX, it has contracts with Citibank. It has contracts with essentially JP Morgan on their subnet green. It has contracts with essentially Standard Chartered Bank on subnet greens. There's so many assets out there that have tremendous amount of contracts in place, and some of them have a tremendous amount of licensings. So when they're ready to go, they're really ready to go. And if we get regulations, all these assets will detach themselves from Bitcoin's footsteps and start going essentially into utility. And then we'll really see what Bitcoin is about. Because if Bitcoin ever becomes volatile again under regulations and crypto assets have been utilized, the ones that have utility, then they're not going to get affected by Bitcoin's footsteps. Because if XRP is being utilized 24/7 by banks and institutions internationally, then how's it going to get affected by Bitcoin's footsteps? It's being used 24/7 as a medium of payments. If XNN is being used in the same scenario, if Chainlink is being used due to their data purposes 24/7, international or domestically, AVAX is being used 24/7, or HBOT is being used 24/7, or XDC is being used. Just it goes on and goes on and goes on. If all these assets are being utilized 24/7 internationally, 24/7 internationally, being used, so much amount of money is being transferred around the world, that it doesn't matter what happens to Bitcoin, because we're not following its footsteps anymore. The only reason we are following its footsteps is because we don't have regulations. That's the only reason. That's the only reason we can't detach ourselves from it, because we don't have regulations. No regulations means no utility. It means there's gray areas. It means that banks and institutions don't know if they can cross any lines, because if they cross too many lines, they'll get sued. So that detaching needs to be happening. We need to decouple ourselves. That detaching is the best thing that's going to happen inside the crypto space. The faster we move away from Bitcoin and we get regulations and all these utility assets can detach themselves from Bitcoin, the better it is. Because that is the thing that's dragging us down. That's in regulations. We don't have regulations, so we follow Bitcoin's footsteps. Bitcoin panics in every situation. A war breaks out, Bitcoin panics. Economic pressure, Bitcoin panics. Any scenario happens in this world, Bitcoin essentially gets very unstable. And we don't have regulations, so we follow its footsteps. Even though, again, it's supposed to be a safe haven or a digital gold or so on and so on. But I've been saying this for the longest time. About 2 years I've been saying this. And, well, today this has come out, as I was reading essentially. So while many major assets have struggled in 2025, XRP and gold's performance has surprised the crypto and traditional financial markets. Despite years of criticism, especially from Bitcoin maxis, these two assets have proven to be very resilient. As Bitcoin continues to decline, XRP and gold, who have been criticized by Bitcoin maxis, have emerged as top performers, staying in the green while nearly everything else is sinking. For years, Bitcoin advocates criticized XRP, essentially labeling it as centralized, and dismissed gold as an outdated. Ironically, these same assets have delivered positive returns, and this year, whereas Bitcoin, once dubbed digital gold, has failed to hold the value aimed at a broader market downturn. Bitcoin has long been prompted as a store of value, a digital alternative to gold. However, with Bitcoin in the red and its volatility causing concerns, that narrative has come under fire. Meanwhile, gold, the traditional actual safe haven, and XRP, often overlooked, have defied expectations and provided gains. This shift challenges the essential assumptions of many crypto enthusiasts and highlights the need for more diversified investment approaches. XRP's strong legal position and increasing adoption alongside gold's historical reliability are likely factors behind their solid 2025 performances. The current trend could mark a turning point. Investors may start reconsidering their stance on XRP and gold, especially if Bitcoin continues to struggle. The resilience of these assets suggests that utility in the case of XRP and stability in gold are gaining further overhype-driven essential narratives. And it definitely is overhyped. With the year still ongoing, it remains to be seen whether Bitcoin can recover its position. But for now, XRP and gold stand tall, aimed at the sea of red. Now, since the beginning of 2025 until now, XRP has been up 10.4%. Since the beginning of 2025 until now, gold has been up 12.4%. And Bitcoin down. Ethereum down. Everything else pretty much down. But the two assets criticized by the Bitcoin maxis, XRP and gold, are better performers so far in 2025. And ironically, one of them being gold, which Bitcoin is supposed to follow its footsteps, because Bitcoin is digital gold, and Bitcoin is nowhere to be seen by following its, gold footsteps. But the two assets that have been criticized by Bitcoin maxis for the longest time, XRP and Bitcoin, so far are better performers from the start of the year until now, by XRP being 10.4% and gold being 12.4% up. But those are honestly, it just shows you how things are going. And on that note, we have reached the endings of tonight's live. If you're watching this for the first time ever, this was the CMF Live. It stands for Crypto Miles Family, and my name is Miles. I'm hosting the live that you're seeing right now. I host this live Monday to Friday. It's completely free for anybody to join in, and everything I provide is completely free of source, just to put it out there as well. This is episode 282 of the CMF Live. We are on episode 282 of the CMF Live right now. This is episode 282 right now, which is incredible that we're on episode 282. If you're watching this for the first time ever, in this live, I always talk about the most recent news happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. And we also do Q&As on this live as well, which means if you ever do have any questions, put it down in the comment section. I'm more than happy to answer the questions you may have. And that anything I say is just, and the disclaimer of this live, as always, is no financial advice, no political advice, and whatever I say is only for entertainment purposes. But if you watch this live for the first time ever and you enjoyed this live, you can tune in tomorrow again at 11:25 p.m. UK time. This live always starts. Like, follow, comment, share, retweet if you haven't already done that, CMF members. If you watch this for the first time ever, if you watch this on YouTube, subscribe if you already haven't, turn on your bell notification. If you watch this on X, follow me, turn your bell notifications, and get notified when I go live tomorrow, Monday to Friday, 11:25 p.m. UK time. Now, obviously, before we do go, let's go inside the comment section first, because I don't want to miss out anybody's comments before we do leave. So I'll go through them very quickly. Let's see where we're at. Good information tonight, as usual. Good information tonight, as usual. Killing it. Let's go, Curtis. Look at making money. I guess it's to overlook Putin and his ways. Justify it by saying one is perfect, and I wonder how far the signal will go for another person. Mathematically speaking, Miles, changes only help those with significant amount of money. It hurts those with little money. Family dinners be political sometimes, though. Lol, pass the salt. Pass the salt. Banks lost a lot of money by not allowing the crypto firms to open accounts. Facts. Absolutely, I agree with Scott 100%. I hope that I will not have to pay taxes on my XRP fortunes. Let's go, Scott. Well, borrowing, yes, it will be once in a while, but you do have to pay that back regarding as using your assets as collateral, so you can skip on tax. Banks make money off our deposits. Very true. They lost millions or even billions from us from not doing business with crypto firms, yet allow the retailers to make deposits. True. XRP is a hidden gem. People just don't know. Facts. Bitcoin is a distraction. Facts. Teach Miles. Let's go, Stormy. Bitcoin maxis are similar to Democrats. Pretty much, yes. But at the moment, if BTC goes down by 5%, then all the altcoins go down by almost 20%, including the XRP. So it's not entirely, well, it is true because we don't have regulations. That's why. I understand that gold does go up with the US dollars because they're actual safe havens. My wallet cursor with my XRP. Let's go. Decoupling is definitely a great thing to happen. Let's go, Thompson. True real world assets will definitely disclose them, essentially disclose themselves. Facts. Let's go, Thompson. Stormy. Let's go. Night, Miles and CMF. Pablo. See you tomorrow, same time as usual. Good night, Miles and CMF. Good night, Miles and CMF. Thanks for the great live. Let's go, JP. See you tomorrow, but at the same time as usual. Thanks, Miles. Good night to all. Stormy. Let's go. See you tomorrow, same time as usual. Thank you so much, Miles. Have a lovely night all. Let's go, Lena. See you tomorrow, same time as usual as well. Thanks, Legend. Great insight as always. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well, Shelly. It's always enlightening hearing you speak facts. Let's go, Artistic. See you tomorrow, same time as usual as well. Thanks, Miles. Have a great night, everyone. Ghost Burner. See you tomorrow, same time as usual as well. Good night, Miles and CMF. Great live. See you tomorrow. Free and forever. See you tomorrow, same time as usual as well. Have a great night. See you tomorrow, Miles Let's go, autistic. See you tomorrow as usual. Awesome show. Everyone should like, share, and comment. Take care all. Let's go, Ray. Thanks again for another brilliant live stream. Let's go, Thompson. Good night, Miles. Cali. Let's go. See you tomorrow. Same time as usual. Facts. CMF members, if you haven't already done it, please like this live. If you watch us on X, CMF members, please like this live, retweet this live, put a comment outside the live. If you watch us on YouTube, like and comment as well. If you watch this for the first time ever, you're more than welcome to like and comment and retweet as well, and follow or subscribe depending on where you watch it from, YouTube or X. And tune in tomorrow, 11:25 p.m. UK time, on time as usual. Also, you can follow me, turn on the bell notification to know exactly when I go live, but it's the same time pretty much every Monday to Friday. And episode 283 will air tomorrow. Another outstanding effort, Miles. Let's go, Scott. See you tomorrow, but at the same time as usual as well. Greatly appreciate my boss. Let's go, Thompson. See you tomorrow, same time as usual as well. Love and respect you, my brother. Let's go, Scott. See you tomorrow, brother. Same timing as usual. I'll be seeing everybody tomorrow. Same timing as usual. Everybody have a great day or a great night, depending on where you are around the world. And also join our X communities page, which is called Crypto Mouse Family Lounge, and even join our Telegram group for this live, which is also free. Everything is free. It's been free for over 2 years. It's going to remain staying free forever. See everybody tomorrow, same time as usual. Like, comment, share, retweet, subscribe. If you haven't done it already, CMF members, like, comment, and share, retweet. See everybody tomorrow, same time as usual for episode 283, 11:25 p.m. UK time onwards. Turn on the bell notifications as usual. See everybody tomorrow, same time as usual.